Greetings and happy holidays. I'm recording this on the 22nd of December, 2023. This is a re-recording or a re-stream of a trade that happened off-stream on the 20th of December. You can see right here, a book map records all streams and orders. So I'm going to, little background here. We had a big sell-off. I was away from the screens. I came back in about 2 rather than start up the stream again for the day. I just engaged in the market. Now, the reason that I think this is important to stream this and keep in my virtual trading journal is that it is a classic example of a risk-neutral trade and why not moving the stops after the risk-neutral scale has been taken is so important. I did that, as you will see, and cost myself, I made a couple $100, I guess, but I cost myself about 11 to 12 handles, 40 ticks or so without ever getting even remotely close to my break-even stop. So what I will do now, this shows you the context of the day so far. Here's the levels. I disregard the low because how would we know the low, right? But I'm going to then start this, and I will not touch the trading tools at all, but you will see the trade happen as it's been recorded. And for some reason, the multi-bracket doesn't seem to stay properly. It just flashes a few times when a trade is entered. The entry point and the break-even point do function as normal. I'm not sure whether that's a bug or just peculiar to this particular stream, but what I will do is I will stop the playback so that I can discuss and point out the stops, targets, etc. when we get there. So let's go here. I'm going to get this up now to where it would be a normal setup for me. So that's generally how I have the screen. And let's have a look. Consolidation. This microstructure, micro VPOC or retail. We've got a low volume node here. Possibility for a risk neutral or a mean reversion back lower. And we'll see what we see. There we go. All right. Now, this is the entry. This entry marker will remain. This is the first scale or the risk neutral scale. This would be the second target or T2. And these are the stops. So focus on 7550, 7500 is the stop location. And we'll move forward now. A little better, I guess. That's a little easier to see. There's T2, T1, entry, and stop. Now you'll see that they don't hold like they should. They shouldn't be flashing like that. They should just be there. Why they aren't, I don't know. But fortunately, the entry point does remain, and the break, which is this green line is the break even, the red is the entry. So when we scale, you'll notice that this break even will jump up here to where the stops are living. That's about the 75.5. And I'll stop it again at that point. Now, at this point, I had moved the two stops to the same location because, as I mentioned, the multi-bracket keeps one at 13 and one at 12. You can't start out with them the same. So I moved this 13 down to 12 so that both stops are at the same point. Now, there is the first scale has been taken out. The break even has gone up as it should, and it's just on the stop. Now, what I always do just to compensate for commissions is come just under or, just inside of the break even by a tick or two, take care of commissions. And that move will be seen here in a moment. And what I did wrong here was rather than bring it under here, just under break even at 75, always remember that number now. All this liquidity, I brought it down to the entry point, which should have then, if I were taken out there, would have locked in this first scale of 12 ticks on one contract. Very poor trade management. I should have left by stopping under the break even until the trade had moved well aware of my second target and then started the trade management process. Now let's continue. Brought the stop down. Again, trailed it down a little bit lower, 1.5 lower, about a point lower actually, than the entry. But it doesn't make any sense, you see. We haven't threatened. There's no low volume node. Well, you could kind of argue this is a low volume node and we've got a high volume node here, but we've traded past that and coming back up. So not really extremely poor trade management. The liquidity's lifted off. Notice the break even where the stop would be, 75 basically. Now we're trading around this microstructure. And there we are. So there was the scale. I hope I didn't stop it quite quick enough, but there was the trailing stop taken out. So the trade is now over. Sure if I can go back and catch that again or not. Not sure if that'll work or not. It's too tight, I think. Oh yeah, maybe it will. Let's see what happens. I haven't ever tried that before. This is for my own knowledge, obviously. The purpose of this stream is my virtual video journal. I can hear myself talk. I can see what I'm doing. So let's wait for these levels to load. I took it back too far. We're just going to get the into the trade here now. That's too bad. I'm sorry about that. That didn't work like I had it planned. Okay, so we'll see this. We'll see this again. We'll see the entry, the stop, the target. I wish I'll have to figure out look at another couple of these over this holiday and see if this is symptomatic of the multi-bracket orders or just what. So there's the entry. So we have 75 quarter, which is going to come down here, of course. We've got 69 quarter and 66 quarter. So 69, 66, and our entry will stay the same and our break even will not change. But for some reason, these order lines disappear and I don't know what the hell that's about. They didn't used to, and maybe it's the multi-bracket, maybe it's just this particular recording or the newer version of the multi-bracket, I'm not sure. So here we have it. Oh, terrible heat there. Half a point, 1 point. Oh my goodness. And now we're going to go down and we're going to hit our scale. This was moving the two stops together at 12, from 13 to 12. And there's the scale. So this is the first scale. We're now risk neutral. Risk neutral at 12. Had I just moved these stops just below there, that would have covered the commissions. And we would be, let's just, for sake of this recording in this stream, call it 75. So 75, 66 quarter, 63 quarter. Let's go. But now you see, rather than pull it here where it should have, I brought it down to entry. Thinking, okay, now I've got 150 bucks, 12 ticks. I can't do worse than that. But I did much worse than that. And if that wasn't good enough, when we got a little more depth away, I moved the trailed the stop again from entry to 1.5 below entry, which turns out being 70, essentially 71 quarter. About, hard to tell, but anyway. The liquidity lifting off is a bad sign. Opening the door to higher ground, and there's the scale. I mean, there is the trailing stop has been hit. However, remember, 75 is where the stop should be sitting. Okay? It was taken out here at 71 quarter, 71 in that area. And this was the second target, which is now gone, right? Because the trade is closed. Both contracts are now closed. Most open trades are now closed. Now bear in mind now that here's the entry, right? So that's 1 point heat. So disappointing that those order lines don't remain as they used to. Thank goodness the break-even line does. So that reinforces that. And obviously, it starts here at the entry, and then at the first scale of the risk neutral, that's where break-even moves to. So 2 points of heat, still 2 points off our stop, or the correct stop location. And it's obvious that this is a recording, so you can see where the low of the day was, and this trades down to there. So we left essentially from 62 half, 72 half down to about 62 half, 62, 10 points on the table. That's the downside of not trusting your trade plan and not trading your trade plan. Plan the trade and trade the plan, right? There was the break even. That's where the scale should be. This is as close as we got to heat, about 1.5, 2 points from it. Never so much as comes back or winces. Got our risk neutral scale early on in the game, within seconds, probably less than a minute. And now to be trade managing, there's a couple different ways you could go. Sure. Now we're past this pullback, dropping down again. So you start thinking, okay, what are we going to do? Are we going to pull down and trail to these swing highs? Swing high. Swing high. Probably a good idea. Or could use these low volume nodes, which are essentially the same as these swing highs. So let's say you've trailed here. Now you're going to bring it over here to this low volume shelf. And you're basically 64, and it's going to get down there for a tick or two. At this point, you'd be targeting this liquidity, which this obviously wasn't there yet because you didn't know where you'd been. But you'd be targeting, and this would be the ETH low, because this is the full session. So this is the ETH low, which is a very definite target. So let's say our target is right there. And that's what we would be targeting with this trade. Remember that our stop's at 75. Or, if we've been trailing it, and we're down in here someplace and it's been taken out. Or the more plan-oriented version, I guess, is to leave the stop where it belongs at break even, at the risk neutral scratch, and target your major level, which is in this case, the low of the full session, which is the ETH, the extended or electronics trading. And that would be right there at the 61. So you sit here and wait. I hope that this recording and stream come off okay. I think this is an important addition to the volume for the stream and the my video trade journal here, which is the stream. And could be a learning tool for anyone else that would be watching, because it's a very clear explanation of risk neutral trade, proper trade management, or at least something that I think is extremely important. And remember that our target is 61. we don't know this RTH low is here because at this moment, this used to say the ETH low. That was the low of the overnight. And there's a 90-some% chance or statistic that either the overnight low or high will be taken out by the RTH trade. So we're obviously not near the high at this point. Means we've got the low to go. And let's see what happens here. Got to be very mindful of the time. It's 14:33 Central. Market closes at 1600, but I don't ever trade past 1510, 15 quarter. But the major price movement, closing swing trade, etc., is usually around that. Usually around the 1440, 50 area. Well, we're awfully close to our target. And generally speaking, you leave a couple of ticks for the sweeper. So essentially, we'd be out at about a net 10. And there we go for sure. All right. Now let's take a look at this on a bigger picture again. Here was our entry. Here was our break even, and our scale should be sitting here. The closest we ever got to that, 73 half, sold off, pulled back, sold off to the target in the space of 10 minutes, 25 to 35, you know? So that's about, you have 10 handles, 40 ticks on the runner or the T2, and there's 12 ticks on the scale, so 52 ticks at 1250. About $600, more or less. Nice 10-minute payday. So I thought that this was a valuable bit of information and learning. I'm real opposed to and never would try to pass off a recording as a live stream. However, this is a recording of my live stream and my live trade, simply with, it's a bookmap recording, simply with my narration put on the top for the stream, so that there could be some, I want this in the record. And I think that concludes what I was trying to, oh yes, one other thing I wanted to see here. Well, the high, pretty much exactly at the high. I'm not sure whether, but that, that's not really taken the stat out. It's touched it on that overnight high, because this is the full session, which starts at 1700 CST the evening before the regular trading hours. This is the regular trading hours session, and this is just what's visible on the chart. So essentially, look at that. To the tick. So that's, that's pretty incredible. Anyway, this was a valid stat and target, and it was hit smack dab on the nose. Not the regular trading hours low, but the fact that it previous to this getting here, this was the overnight low or the ETH low, which is a very, very definite target with a huge percentage. This is so that's something that's I think that covers the recording. And 25 minutes, that's a reasonable period of time. I'm sorry about the fact that those lines don't carry forward like they should, but I think it was clear. All right. Merry Christmas.